Good evening, all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up, and this wrap-up is for Thursday. It's June 29th, 2023. Don't you feel like you want to go on holiday already? That's what everybody's doing. And the volume will thin out because July 4th is right next week. It's in a funny time of the week. So traders will start taking the week off, believe it or not. Whenever you get it, like on a Tuesday, they travel where they're going to go on a Monday, then they're there for the whole holiday, and they go, why am I rushing back? That's not everybody, don't get me wrong. I will be here for you. But that is how it works. I will be taking off in July for about 4 or 5 days for myself. I do it every year. I like to go to Montana and enjoy the beauty and do nothing for 4 days. It's just absolutely gorgeous out there. They call it Big Sky for a reason. If you've never been there, I'm a guy that tells you, especially when you're not near any city and you look up, it's fascinating. So today was one of those fun days, all right? Durable goods came out. Normally it doesn't mean anything. It's the final number for the first quarter. We're at the end of June. This quarter's wrapping up the second quarter. Whoa, the revisionments were big, much stronger quarter than the market thought it was going to be. That was one of the jolts. And the other jolt came, not from the jolts number of jobs. That's going to be coming out shortly. The other jar to the market, how's that, was the initial and continuing claims, both down sharply. So people are still finding it easy to get jobs. They're getting off the rolls. They get on them. They get these jobs right away. And you've heard what was said yesterday, well, 2 days ago, if you were watching the forum in Sintra, Portugal, as they had on Chair Powell, the Bank of Japan, the European Central Bank, and Bank of England governors. To a person, the jobs market is strong. All right, and this is the issue that you've got. You've got inflation there. I realize, a while back, the San Francisco Fed had a paper written. Well, they don't think it's tied to that. Nonsense. That's what I said when I read the report. I mean, there are times when academics come out and they make all their points and they're great. They can twist these points. But if people have money in their pocket, if they feel, hey, if you don't want me to work for you, I can go get a job right here. I'll probably make $1 more. You think that they're scared of spending? They spend. And if they're spending, you're driving the economy. Now, what they're spending on becomes the key. We know it's been service because we're in the summertime now. So people want vacations. Try to get on an airplane. You know that they're jammed and they're doing record business. You're going to see that everywhere. Try to get a good hotel somewhere. We have NASCAR in Chicago. You think you can get a hotel easy in the city, especially cheap? It isn't going to happen. NASCAR starts, I think, Saturday here. First time they've ever done this in Chicago, taking our main Lakeshore Drive, and they're putting the NASCAR cars on. It's going to be fascinating. There'll be hundreds of thousands of people, and it's going to be good. But this is the festive time in Chicago. Everything gets nuts here. We have all these concerts. It's never ending for the whole summer. But I don't want to get off track here. That also brings in service businesses, and they're making a killing. They're hiring people left and right. How many people had to be hired for NASCAR? Just think about it. All the people to service the people that are going to be in there, building the stands, watching the people don't get hurt. It's going to be insanity. And that's what's going on, not in just Chicago, but other places. So you've got a strong economy and people can buy. NASCAR sold out here. You know what the ticket started at? I was reading it today. $289. And they go up to $4,000. I'm sure they go more if you're buying these corporate suites and everything. I mean, that's pretty insane, don't you think? I'll be at home watching it on TV for free. But that's how you have to look at how this all goes. So you get these combination of numbers, you got to be careful. Now, tomorrow we're going to get spending and personal income numbers. Those are going to be real important. If they continue to do this, right around the corner, a couple of weeks, we get the FOMC meeting. What do you think they're going to do? You keep hearing Fed Chair Powell explain his position and saying, I think we'll go several more, 2 more interest rate hikes, maybe more, whatever it's going to take. Well, the data is saying he's got to go. So today you saw the bonds and the notes add yield like mad. The stock market, though, Other than the NASDAQ, which has been the stellar leader, it's suddenly the market where what people are doing is they're buying everything around it. In other words, let it stay where it's at and away you go. And that's what's going on right there, that the market played like that. But Tesla going up, Apple $1 away from being a $3 trillion company. I've never seen a $3 trillion company. All the automakers, I did that special report on the automakers. They're getting bids. By the way, I think my words worked. Remember, I've been telling you my friend having the trouble getting his Cadillac Lyriq? Well, guess what? The car is fully in now, and they have asked him to come pick it up. Now, he bought it out of Chicago and Minneapolis. Why, I don't know. But they've got a truck taking his car, picking it up, and flipping cars. So, Mary, if you were listening here, somebody suddenly listened and he got his calls and the monies have transferred hands and it's a done deal. And he's not buying, unfortunately, the Lucid, which I would have liked to have seen him have too. All right, Rivian. I mean, this is a heck of a nice ride back, don't you think? I'm impressed. When we take a look at it, you've got a higher high, lower low, but the breaks aren't holding the way they did before. The market's over 2 of the key moving averages, but I don't think it's going anywhere on it right now. You'll say, Ira, come on, you just said how nice. Here's what I also said. I said I think you're in sideways action and you're going to fail at the upper and lower Bollinger Bands. Now, eventually you break out of them, and it'll be after the fact. My technique doesn't, unfortunately, tell me when that's going to happen, other than looking at this other character, which is called the momentum. The momentum is not overbought. There could be buying, but the odds of making money and buying over a Bollinger Band, not the greatest thing in the world, because only 5% of the time do you stay over it. Don't get me wrong. You get a pop, you can pull back in the Bollinger Band. If it goes higher, the market's gradually working higher. But you have to prove to me you're coming out of the sideways action, and you haven't done that yet. Schwab applauded yesterday when it's, with both hands, it had to, when it saw the results of the Fed stress test. And that's helping them to a degree. Now, there's been a lot of articles in Bloomberg about hot money. Do yourself a favor, go to their website, type in, and you got the search bar, the magnifier, hot money. You will understand what the term is and how they and other firms, this money moves around, especially into the regional banks that want to boost their reserves, but they're paying through the nose for it, and this money moves them like that. That's why it's called hot money. It stays for a while, and suddenly it's gone on you. I'm not convinced that any of this stuff that we're hearing is helping in any manner the mid-tier regional banks. Interest rates going higher is not the thing you want for them, and I think there will be problems there. When I look at UGA, the gasoline fund, it has gone nowhere. And the one thing I did right as a futures broker so far is I told my clients, let's let this play for the 4th of July go. The play was for the first holiday in June, and that one worked. This has just gone flat in the water at this point. Now, financial services, I wonder. Normally you get higher interest rates. The big banks have money. They're all in good shape. That helps it. Is that going to be the case? The work we have right now is saying no. It has got the Bollinger Band, notice the black arc slipping down, the bottom coming up. They're wrapping their arm around it. That normally means volatility coming out of the market, not going into it. You'd have to break through all this and stay over it for a day or two to prove to me that it's not going to be the case. The trend is up, the bias is up, but I see the 100-day, the 200-day, and the upper Bollinger Band as resistance. Do I think the pros are going to buy on the break here at 33.10? If they did, they'd have a tight stop right under this 32.70 level. At least I think they would. And they wouldn't look for much more than the 33.40 level. It's not enough to play for. In XLI, overbought, getting a nice run in the industrial sector, but it's not been the leader of the market. I don't even know why it's up like that. We do get tomorrow the Chicago PMI numbers, so I'll be looking to see has that got anything to do and help anything. NVIDIA. So I'm already hearing the analyst on TV going, you're not going to get much of a break. You probably want to buy a little bit of this here to get it into your portfolio and do some averaging down. So that seems to be what I'm hearing. I didn't hear it from one analyst. I heard it today from 3 on different stations. And that was the common answer. Now, the rush to it ended. Now the market's just sort of drifting here. It's in a minor downtrend. Why? Lower highs and under the 18-day average. But I could also argue you got higher lows. This low is, this one right here is higher than that. I'm going to let somebody else want to own it. I would say 372 is major support in the market. SOX has been doing better than NVIDIA, which is strange in itself because it was the one that broke the first. But they all seem to want to hang at their 18-day average. Okay. The home builders still strong. People have, I'm going to repeat, people have money. And when they have money and they want a home, this is June. You're buying now. If you're going to a new home builder, you're saying, build me my home now. You're making your deal. You don't do this in December. You're doing it now. This is when families make the move. They move kids to new schools. They make arrangements, whatever it is. As long as you keep the embedded reading on pullbacks in this market, I contend it'll be bought. However, I see big resistance at the Bollinger Band. And no, you're not going to get me to change my technique and say, oh, it's going to go through there and you're going up to 95 right now. Not going to happen. In the energy sector, it's trying to be better. You suddenly have higher lows, higher highs. This is the first time. Why suddenly? Oh, I forgot. Oh my gosh. OPEC meeting next week. You think you want to be bearish going into that? I don't think so. Oil prices have not gone the way that the Saudis want. They already said they're going to cut 1 million barrels. They have already formally told Bloomberg, CNBC, and the Wall Street Journal to not attend. They are barred from the meeting. This is the second meeting in a row. I don't know what they all did wrong. Something is there that they refuse to answer to anybody why they're doing that. But assuming you don't get back under the 78.15 level, the trend is now back up, and you can make an argument that 82.55 could be the next spot this market wants to head into here. In the gold, the dilemma for the gold market is this. I think you've gotten to the point on futures where you're in the zone where you don't have to really go much lower. You're about there, the 1900 level. I had targets between now 1899, that level, and if you watch my futures, you'll see I cover it, and I said I think the professional money's covering their shorts. That could happen here. You're still in the bear camp, though. You have an embedded reading right through here. I think rallies are going to be sold. You had a bearish crossover. So it's one thing at 1900 to say, I think you're seeing short covering, but at 1930, 1940, I don't know. I want to take another look at the market because I don't think it has a lot of upside potential when the Fed's going to raise rates again. I mean, gold's enemy has to be a strong dollar and rising rates, and you have both. So you can get bounces, but I don't think trend changes are happening here. And in silver, the battleground is very clear. It's the 200-day average in the Bollinger Band. The trend is down. Is it going to embed? It hasn't done it yet. Embed means you take the momentum of these numbers and they go sideways under 20 for a while in the bearish number. In the copper, open up your book on the futures and you'll see why this is coming down. Futures have been collapsing. And I'm very happy to say that for my futures traders, I was telling them, don't get long this copper. You're going to regret it. And it worked out to be that way. I still think you can maybe make it down to 36.09, 36.34. It's oversold. It's no longer worth a short sale. Look at BND. First, IRA has been telling you, I like that. I like to talk third party. IRA has been saying, you're going to spin in here. Be careful. This market's going to chop you up. I think I was right. Higher high, lower low, and you're going nowhere. You've missed nothing on this play. This is a son of a gun. You got overbought, couldn't make it up to the resistance of the 100-day average in the upper band, and now you're down to the lower band. I don't look for a big follow-through down there. Not at all. UUP, hey, the Fed's going to come to the rescue of the dollar. This can go higher. They cannot come back and say they like all the data coming out. The Fed members have all said they expect higher highs in rates. Have you seen anything to stop that at this next meeting? I haven't yet. There's a lot of data before the next meeting. We're already coming to the end of the month. You got jobs data. You got a bunch of stuff coming up. I'll save myself to see that. I don't know if the CPI report is in front of the next meeting. I'll look that up before we talk next time. And if the dollar's strong, the euro should get weaker. I'd be looking in here. The two currencies are in a very different position, with the dollar just super strong, super economy that's resilient as can be, and problems in European economies that are nothing like ours, and they got to keep adding more layers of interest there to beat down the inflation. And remember, they don't have the energy of protection the way that we have it, which is very different. I wish Obama would get more aggressive with that. Tomorrow, another event that will affect people will be, how does the Supreme Court rule for these bank loans that the kids that went to college have? If you take the money away from them, that takes some money spending out of the economy. A big day tomorrow, and you saw, of course, the affirmative action vote today, and that's very controversial both ways. So one of the things that I know a lot of you do is you use TradingView. And as you know, we've built my suite of indicators for it. The swing lines, the outside days will pop up if you want them. My slow stochastic reading, which are very different. The past 2 days or 3 days, I don't know if you're aware of it. If you looked at my slow stochastic, they're not how they normally looked. First, they were the wrong colors. Then I was saying, they don't look the way they should. Well, that was the traditional slow stochastic. I've got my version now. We had changed a bunch of software in my company, and now everything got fixed last night, and I'm back to normal. You can get mine. How do you do all this? By the way, it only takes up a slot or two on your part. So here's how you do. You go to our website at www.iraepstein.com, and when you're there, go up to the client resources, look at charting software. You'll see the TradingView indicator. Click it, fill out everything you need. We then will get a message from our website that you've gone in, you've signed up for that. We turn it on in TradingView, and then when you go back to your suite of indicators, kaboom, we'll send you an email. Everything will tell you that it's all set up. iraepstein.com. If you have questions, go here. You can also give a click to the top up there. It'll take you right to the area you need. I'm Ira. You have a great day. I will talk to you all tomorrow morning. Take care.